Hello and welcome to CMC Markets Weekly Trading Outlook for February the 1st, 2016. My name is Colin Szysinski, Chief Market Strategist. We're coming off what's been a huge week for markets, a big turnaround from what we saw at the beginning of January, 2.5 weeks of hard selling and 2.5 weeks of a big turnaround. And it's interesting because we've actually seen markets climbing a wall of worry. There's been a lot of bad news out there. There was big increases in U.S. oil inventories, a lot of profit warnings, earnings misses, and also the weak durable goods orders. GDP was a little bit below expectations, and but so we'll see what happens when we go into the new week here. But the important thing is this: all this bad news, bears have had every reason in the world to start selling, to hammer markets down, and they can't do it anymore, which says that they're exhausted, and the bulls are quietly coming in and reasserting themselves. So we'll see now: can this continue into the new month? Can this continue? Can we get a stock market rebound and oil markets and currency markets that can continue into February? And this week we start off with a lot of news, so there's a lot of action for potential action and also things for people to react to. And we kick off right away on Sunday. We get manufacturing purchasing managers reports for China, Japan, Australia, and other Asia countries. Monday, we get the manufacturing PMI for US, UK, Canada, Germany, North America, and Europe primarily. Stanley Fischer, the vice chair of the Fed, is speaking on Monday. Plus, we have our two central bank meetings Monday night. We have Australia RBA meeting, India's RBI meeting, both of those not expected to bring any changes. The Tuesday, we have a little quieter day for news. Wednesday we pick up again with U.S. ADP payrolls. Thursday we have a Bank of England meeting where they're not expected to make any changes. But and then Friday we wrap with U.S. and Canada employment and trade balances. So tons and tons of news out throughout the week on the economic side. And the big thing is going to continue to be the driver, and what people are looking at is the Fed going to raise interest rates in March, or are they done? How strong really is the U.S. economy following the first Fed rate hike? The one thing we did see, the Chicago purchasing managers had a huge lift in January, so we'll see if that continues into the rest of the PMI reports, because those will give us our first indication of where the global economies around the world are heading in January. We're heading in January. Were they going off the rails like the markets would suggest, or are they continuing to hold up, which would suggest more Fed rate hikes throughout the year? Even if the Bank of Japan went more dovish, but it doesn't necessarily mean that all the central banks have to do that either. They've still got a deflation problem, and the low oil price isn't helping that. And then at the same time, we're seeing crude oil prices starting to bounce back a little bit. So if that pressure comes off, also takes off the pressure from central banks to cut rates. So a lot of moving pieces right now on that, and we'll be watching for also the signaling of confidence. But the big one is that is the U.S. economy continuing to grow? Last year, the winter was particularly awful. Temperatures were cold, and actually the last 2 years, first quarter GDP was pretty rough in the U.S. because of poor weather. This year, for the most part, the weather's been pretty benign because thanks to El Nino, with the exception of the one recent storm, the nor'easter that nailed Washington and New York and the East Coast. But otherwise, January's been pretty nice, and so we'll see if that starts to turn into an improving economic conditions. We've certainly seen that in the Midwest and the Chicagoland area. So, I just thought I'd speak a little bit to some of the markets here. And one more thing before I do that. Earnings reports. It's another big week for earnings. This week, we still have a couple of tech names reporting. We have Google and Yahoo and Symantec. But we also get some breadth out into other sectors. A lot of big energy this week. Exxon, Mobil, ConocoPhillips. We got Pfizer reporting, UPS, General Motors, and so it's quite a broad variety of senior companies reporting again this week. So we could still see quite a bit of action in specific names. We've seen some big moves on earnings. Facebook had a big rally. Amazon had a big sell-off. Electronic Arts had a big sell-off. Microsoft has been going up. So we're getting mixed earnings reports overall. Generally speaking, earnings beat the street in fourth quarter, but companies have been guiding down. Expectations are lower. The stock market's come down. Again, expectations for 2016 have been trimmed quite significantly. So we'll see what happens as we carry through that. If we start to get stronger economic data, that could certainly help the help the markets here. So we're going to start off here with I've got the U.S. dollar index open. And so I thought I'd talk to that first because as we can see, it's starting to get up close to this 100 round number again. We've got this big green candle here. What is this? This is basically from the big drop in the yen. When the yen fell off, went off a cliff after the Bank of Japan went to negative interest rates. So that's boost. It's a big component in the U.S. dollar index, not quite the euro size, but it's still pretty substantial and enough to move it. Now the big thing we're watching with U.S. Dollar index is does it break through and hold 100. Farther back here, we can see in November, it would peak above 100 and then got smacked back down again. And so the question is now, if how many rate hikes has the dollar index already priced in? I think it's priced in 4. And my feeling is that it's in a topping process and that anything that suggests we might get less than 4 rate hikes this year, we could see the dollar index continue to come down. And of course the opposite trader to the dollar index is gold. And just as we've seen the dollar topping, look at what we've got with gold. Massive bottom here. Look at this big cup with handle break. There's the saucer bottom right there below 1100. Moves up, smaller saucer bottom at a higher level. There's your handle. It's broken out from that, and look at this strong upward momentum in the RSI. Gold is still running here. So if the US dollar shows more signs of topping out, we could have another good week for gold here. And as it is with other central banks as well, Australia, UK are likely not to do much of anything. So generally speaking, with the exception of the Fed, most central banks are still neutral to easing mode, depending on who you talk to. I'll also note that this week I'll highlight a couple of things. Sterling could have a busy week with the Bank of England meeting. It's been hammered down pretty hard here, especially from the beginning of December onward. Now, some of this was maybe partly a little bit due to oil, but I think mostly it was due to 2 things. One, that the Bank of England now had been expected to raise rates in the first half of 2016. That's not likely to happen now. That's likely to be pushed off to late in the second half of this year, possibly even next year. The talk of the Brexit referendum. Some people say it knocked the pound down, and but I think the bigger thing is that the Brexit referendum probably means that that Carney's going to hold off on rates, and that's where we're seeing the bigger impact wash through. So we are seeing the pound, though, has stabilized here above 140.80 and closer to this 142, 143 area here, had become extremely oversold, starting to rebound, digesting this first initial bounce, but could continue to recover as the U.S. dollar starts to peak and other currencies gain. We also had a huge week for the Canadian dollar, and could be busy again, particularly around the employment reports. The employment reports for the U.S. and Canada, plus trade reports for both countries, come out at the same time Friday morning. Look at this. U.S. dollar CAD got massively overbought. The loonie was hugely oversold. Look at this double top. I almost call this almost heading towards the old vomiting camel pattern. Here's the first hump. Here's the second hump, and now we're just waiting for the neck, and then look out. So this thing here could still be rolling over in time, but for now it's trying to pause around 140, which is after the big drop it had from 147. We could see some digestion here in the next few days. I'll also highlight euro dollar and dollar yen. Euro dollar still holding steady here. Look at this, very flat on the RSI, very flat on the pair, 108 to 110. But if it breaks out of this, that's 111.11, and the pattern measures up towards 112. So you could get a spike on the euro dollar if this starts to really go. And I just want to highlight the yen, which was the one that's had the big move, and we could see more action in yen pairs this week, particularly at the beginning of the week as this all shakes itself out. We had seen it was starting to roll over and head downward, particularly in January. We were getting the defensive capital flows, and what's happened, the defensive capital flows backed off, then the Bank of Japan went dovish, and kaboom, breaks 119, breaks 120, rallies at 121. Next resistance around 121.80, and then around 123.15 to 20 here. But it does look like we're starting to see some weakening in the yen. Moving now to equity markets, the week will likely kick off with interest in Japan as well as in China. We'll start with and it's the last week, of course, before the Lunar New Year holiday. Another reason we could see some early interest in Asia markets. The China's since peaking back in April, the Hang Seng's been hit pretty hard. There's one wave there, two waves there, three waves there. Might be getting kind of washed out here. We're seeing it stabilize and does look like it's wanting to try and start turning up. Very oversold on the RSI. That's downward pressure is weakening. Got to clear 50 to confirm the upturn, but it's around 19,600. First resistance up here around 20,000, 20,030, then around 20,465. So some room for this if we do see the markets turn up. The weakening in the yen, historic, of course, has had a positive impact on the Nikkei. This is quite common. The yen and the Nikkei tend to trade opposite each other. Why? Because Japan's a big export country, and a lower currency can help to boost the earnings of exporters. So we've got that breaking out of a nice downtrend here. RSI clearing 50 signals an upturn, and that's a huge breakaway candle here for the Nikkei. So that's has a nice rally underway. The next thing I wanted to I'll talk to here is just some of the indices. Let's do the Germany 30. Here is still bottoming out. We had a big downtrend. It's leveled off here in around 9,800. Needs to clear 10,000 to signal an upturn. But what's interesting here is if we look at the UK market, we've actually started to get the breakout here. We're seeing that. Look at this. In fact, here it is breaking out here. It's cleared 6,000, blasted right up through 6,100. Here, blasted right up through 50. Upward momentum accelerating. Now it's next resistance up here in around 62.80, and this previous high that it needs to take out to really call off this downtrend here. I'll show the U.S. market as well. Let's look at the U.S. 30. Another nice one here. Look at this turn, breaking up out of a base, blasting up off of 16,000 round number, renewed accumulation, downward pressure fading, and this showing an upturn confirmation pending here as well. So overall, the technicals heading into the new week are looking pretty strong for global stock markets. And the one last market I wanted to highlight here is crude oil. Let's use Texas. Here, big saucer bottom forming. RSI has moved back up above 50. That's a positive sign. It's had a pretty good lift over the last few days, so to see it digest here with a doji candle in here around this 3250 breakout level is perfectly normal, and we could still see more action in crude oil in the coming weeks. So there's a lot going on, a lot of moving pieces, a lot of earnings, a lot of economic news, a lot of central banks speak out there. So in general, we could see a lot of trading action in the markets this week.